Hello, I'm Amanda. I'm a venture partner at Niu Ventures, and you are at Niucast, the podcast that brings Latin America to the world and the world to Latin America. Here with me today, there is Fernando Montera. Fernando, thank you for accepting our invitation.
Amanda, thank you very much for inviting me. It's a great pleasure to be here. And thank you, everyone that is watching.
So without further ado, Fernando, the way that we always like to start our podcasts are just understanding more about your journey.
Well, I started my entrepreneurial journey really soon when I was still in the university. I was at the time playing some video games, and that video game led me to my first startup that changed a lot along the way and ended up becoming Becommerce, which is a software as a service solution to help e-commerces to integrate with marketplaces. And I was 100% bootstrap at the time. There wasn't anything called startup here in the ecosystem, at least not for me. There weren't investors whatsoever. So I had to learn most of the things by myself. And luckily enough, it got quite big. We ended up selling the company to Mercado Libre, where I stayed for almost 4 years as part of the sale agreement. And after that, I was also a founder of another startup called Hubster, which had a similar idea, but we were integrating restaurants to food delivery marketplaces. Instead of packages, we were dealing with plates of food, but the logic of having a store selling multi-channel digital, having to consolidate everything, and all the sorts of automation of operations, sales was also part of the business there. So Hubster was founded in a great time where restaurants were going from the physical to the digital world.
I remember that, yeah.
Yes, and no one was doing something like that. There were hundreds of small solutions for restaurants to control their food service and everything, but not for the online operation. So Hubster did quite well. We grew, and under 3 years, we were able to sell the business to Cloud Kitchens, which is a big tech company from
Travis.
Yeah, you worked for a long time. And yes, so after this second exit that I had, I got really connected to the entrepreneurial ecosystem as a mentor of several other entrepreneurs to try to give back a little bit of what I had learned. I fell in love with some of their theses, started to do some angel investing, and after that also started to invest in a few venture capital funds, Niu Ventures being one of them, which I really like. And now they're with us too here at Doji, that I'll mention later. But that's it. I started to do a lot of engagement with the investment scene as well. And then I founded Doji with two colleagues of mine that went to the same university for masters with me back there in the UK.
Yeah, we hear a lot from stage founders, like stage entrepreneurs. I feel like Fernando is the other way around. It's like the low profile rock star, right? So it's a pleasure to have you here, Fernando. One thing that always calls my attention on your journey is you lived both worlds. You lived the bootstrapping and you lived the VC backed experience, right? So if you can do a quick comparison, let's start with the bootstrapping. I'd love to hear about one of your bootstrapping journeys, how it started and how it evolved and how you managed to make a bootstrap business scale.
Well, that's a really good question. I think there are a lot of similarities, but a lot of differences as well. The first one is, as you don't have external money, you need to make sure that you're profitable from day zero. Otherwise, you're not going to be able to pay your bills in the next month. So that means that you, as a founder, need to learn to do a little bit of everything, because all the areas of the company that you still don't have cash or the capital to pay for, it still has to be done. So I learned how to code, a little bit of finance, of sales, of marketing, of product, everything that you can imagine. I found my co-founder and we divided the areas. He evolved a lot and was responsible for half of all of that. And I was responsible for the other half. But still, it was the two of us until we had a little bit of cash to hire a third person and so on and so forth. So, but even when we had the ability to start to hire some people, we didn't have a lot to spare. So we wouldn't go for the top university, top talent. We would hire the best possible option for that amount that we could spare for that position, which meant that it was usually much more junior people that required a lot of attention.
High potential, low experience people.
Exactly. And that required a lot of hand holding. So what that means is that I didn't have much time left to think about strategy, to think about anything that wasn't like hands-on doing the thing. So at the end of the day, we had a big team, but not so senior experienced people, and everything that required a bit more attention or complexity, it had to be done by one of the founders. And so the bootstrapping experience taught me how to be very I think conservative with cash management, but at the same time, it didn't evolve me as much as I did during the time I was in Mercado Libre in a different context, learning how to be a leader of leaders, having enough budget to hire someone that was much better than I was in that specific area, and learning how to like enable that person to do their best and to remove the barriers from.
Yeah, it's a different like leadership experience. But what I find remarkable about it is just like how like from zero, from bootstrapping, you manage like to grow your business up to a point where like Mercado Libre is interested in buying you, right? Like you create a machine that grows fast without like money injected, right? Is there like any pro tip there? Anything that like you keep on your mindset for the founders in this situation across the world?
As all startups that goes well, I was very lucky in the beginning to start something that already had product market fit. Because we understood really well the problem that we were trying to solve. Because remember when I told you in the beginning that I had this video game experience, and then I started my first business that was related to e-commerce, thought a lot about e-commerce to me, and I started to develop some tools to help e-commerces to perform better. So when we released that solution to the market, everyone wanted to use that. We had no idea how to sell, how to package that as a product, but everyone wanted to buy. So we have this huge demand, and we can hear a lot of definitions of PMF, which is when the market is pulling you harder. So when that happened, it was a matter of even doing a lot of things wrong. If I remember a few of these things, I would never do them today. But even with a lot of inefficiencies there, we were able to grow quite a lot. At the end of the journey there, we had a huge portion of the market using our solution. It was almost 20% of the GMV, the gross merchandise volume of Mercado Libre here in Brazil, was being processed by Becommerce. We had over 6,000 clients. And it was, at that time, it was the biggest marketplace integrator operation that we had in Latam.
That product market fit is lucky, like you're lucky about it. Because in the end, it comes a lot from like observing users or talking to users, of observing them, or like solving a problem that you have yourself, or pivoting your business fast, right? I'll challenge you a little bit, but I guess like you're lucky in terms of macroeconomics, for instance, like what's happening around the world, or like your competition, right?
Yeah, I think the lucky part that I refer to is if you don't have external funding to keep up an operation that doesn't have product market fit while bootstrapping, because you're not making money, you're spending a lot of money, and if PMF doesn't come fast, it's hard for you to be able to balance your accounts. So I was lucky that by the time we decided to create this operation, we already had product market fit. So the inflow of cash happened faster.
And I find it interesting because your migration from like an entrepreneur to an investor is linked to your migration from a bootstrap founder to be a VC founder. You become first an investor to then become a VC-backed founder, right? I find it interesting when you're like just giving us an overview, this fact that things kind of happen naturally, right? Although we try to control things, sometimes it's just like a matter of let them happen. Still like talking about this bootstrapping experience. Is there anything that like came back that is strike you as like the main lesson that you had by the time?
So, again, I was very unexperienced at the time, and we had frequent conversations with Mercado Libre. We were like big partners, and our operation involved a lot of performance of their top sellers. So we were in constant conversations. And in one of these conversations, we had not only the person who was our point of contact there, but the CFO and the head of M&A was in the room without me knowing that they would appear. I said, well, we like a lot what is going on here, so we want to engage in a negotiation to acquire a company. The conversation went a little bit like that. And I was excited about that. And they already had this MOU, which just said that we were engaging in negotiations. And between the terms, was, I don't even know if I can talk about this now. I think so, but between the terms, it was a non-shop clause, which meant that during the period of 90 days that the negotiation would happen, I wouldn't be able to engage in negotiations with any other potential buyer. And I thought, well, I wasn't looking into selling the company. In 90 days, nothing is going to happen. And it was just a letter of intention, basically. Yeah. And I said, okay, let's sign that. Little did I know that when you look at successful M&As, the single thing that drives the most value or negotiation power is your ability to bring more stakeholders to the table. As the negotiation evolved, the whole process took around 6 months. It was very tense. This non-shop clause and the other main terms that were surrounding negotiation were being renewed. So at no point in time I was able to even talk to other potential buyers. And the result of that, and they did a great job, they were great negotiators. The CFO, for instance, he's a great friend of mine up until now, but we were in opposed sides of the table and they knew how to play the M&A game. I did not. And as a result, we ended up selling a company for a much lower value that I think today that it would be worth. We had a company that would be comparable to Series B type of metrics for companies that I see today. And we sell the company for a fraction of valuations that we see nowadays for Series B type of companies. Like if you look at multiple of revenues or multiple of EBITDA, we were very profitable. So, but lessons learned. I think that one single thing was the greatest learning that I had.
Yeah, first exit kind of mistakes, right? Amazing. And moving a little bit like forward in your career, then after you exit Becommerce, you had another business, right? You exit again, you became an investor, you raised, and then you founded Doji. Can you tell us a little bit more of Doji so we can give the audience some context of what it is? Yeah.
Of course. So Doji today, after all the pivot, we're going to talk more about that. But Doji, we're creating an ecosystem that allows any retailer to be able to accept used electronics as part of payment of whatever they're selling. So when you walk into a shop, instead of paying with your credit card, your debit card, or Pix, you can just get that old phone that you have from your drawer, your old computer, and you give that to the store. They will have our tech to appraise these items. And we already have a network of instant buyers for all of that. So that those items turn into instant cash. So you increase your purchasing power and the retailer will convert more. And it's almost like a new payment too.
Yes, you're just bringing liquidity out of an old phone.
Yes, exactly. Our vision says that what we want to do is create a world where this used electronics become almost as liquid as cash. This is what we're trying to do here.
Interesting. Yes, and but it was not always like that, right? And I love those kind of stories because we envision business, we see the opportunity, then when we start to doing it, you start facing all sort of like challenges, right? So first thing when you said when you start explaining Doji was that was not always like that. So tell us a little bit how it used to be and how it evolved to become what it is now.
So the vision is still the same. We had the same vision, but we started from a different angle there. It was more like C2C type of marketplace. If you wanted to sell your phone and I wanted to buy a phone, Doji was connecting you and me, and we were providing all the tools to make this process very safe, convenient, and structured.
And you had your experience from Mercado Libre, right?
Yes, exactly. So what happened, or what still happens, is that there is over $1 trillion worth of working electronics abandoned in people's homes. These products are depreciating around 30% a year. So there's like $300 billion there's just turning to dust when all this value could be returning to generate value to the society or avoiding the manufacture of new products unnecessarily. There wasn't a proper solution for that. Otherwise, this problem would already have been solved. And we went out and interviewed almost 500 people to understand why didn't they sell these products. And when we understood they were complaining about convenience and pricing, we created this platform to solve both at the same time.
Yeah, just like making here like an observation for people from abroad, maybe like some of our audiences from the US where like most of the markets iOS.
Yeah, basically there are two ways where these products can be sold. One of them is going to C2C alternatives like OLX, OLX, or Mercado Libre, or outside of Brazil, they have Gumtree, they have Craigslist, they have eBay, Facebook Marketplace, all of those. But it's very time consuming and it's usually not so safe. You have to take pictures, write description.
And the amount of they pay for that they pay for your phone might not be the ideal one, right?
Well, in this case, when you're selling directly to the end customer, it's good.
It's good, yeah.
But then when you go to the traditional trade-in programs, Apple has their trade-in programs,
exactly.
Samsung has. When you try to sell their products through this trade-in programs, the price is very low because Apple doesn't want to keep this, or Samsung doesn't want to keep this open. They're going to sell to a big company that is going to refurbish and distribute to small distributors that are going to distribute to small shops that are going to sell. So all this chain needs to be fed, and at each intermediary takes a cut. And so the price that someone is paying for your phone is very low, and at the other end, the price that someone is paying for that same phone is very high. So we wanted to solve these inefficiencies, connecting directly who wanted to buy with who wanted to sell, but solving for pricing, solving for convenience and all of that. And I was still under non-compete with Mercado Libre, so we decided to launch that in the UK. My two co-founders are from there, and that's how it started.
Yeah, like amazing. You fundraised for this startup, so it was your first VC-backed experience. And like comparing like to your bootstrap experience, like what was the major difference of managing a VC-backed business?
Going back to that first point of talent, as during my period of Mercado Libre, I was able to like learn how to hire top talent and to manage these people. When I was able to fundraise for Doji and we raised a lot of cash really fast, I was under this impression that hiring top talent would solve a lot of the problems that we knew that we were going to face. So that was the first big difference. I was able to hire best-in-class talent for every area or challenge that we would have. And managing leaders is very different from managing operational people like I had in my bootstrap experience. So that was the first one. The second one is that a VC-backed startup, you had to budget a lot of your energy to be spent talking to investors, networking, creating your relationship networks and all of that. So you have to talk to, and we have like 30 different investors. I have to have regular coffee with a lot of them to send reports, to hear what they have to say. And all of that takes a lot of time that draws your attention away from the operation. And especially when you're fundraising, there were weeks or even months, probably 80% of my time wasn't focused in the operation itself, but focused in everything that being a VC-backed startup means. The second thing is that when you raise capital, especially we raised in 2021.
I've been there, yeah.
So everything was on that hype. And we heard from all of our investors that, well, build the best team, grow really fast, and you're going to raise your next round. And they had charts. A few of our investors, they have a lot of exposure to different startups. And they had evidence that there was no correlation whatsoever between raising a Series A and traction. At that time, no correlation between Series A and traction. That was very strong. And we were just trying to build a big business really fast. And that means that you're absorbing some inefficiencies. You're not so sure yet that you have the product market fit, but you're already pushing for growth and all of those sorts of things, which makes the profitability very, very far away from your control. While in the bootstrap experience, you have that under your feet. Oh, this month we want to grow a little bit more. So you spend a little bit more and you get where you want. And in the other month, you just tune that down and you start to make money again. So it's under your control all the time.
Yeah, but the interesting piece about it is that the VC market changed along the way, right?
Yes.
What it was in 2021 was completely different than 2022, 2023, right? Actually, you had to look back and change your business to make it more profitable, right? So yes, the way VCs worked before, it was like that. You should be attached to P&L at this early beginning and only be focused on growth. But I guess the game changed along the way, right? And forced a lot of us to pivot.
Yes, because a few theses are only compatible with abundance of capital. And I truly believe that marketplace, especially B2C or C2C type of marketplaces, they're very dependent on fundraising, because like up until the point where you have this massive brand and organic traffic, you need to keep fundraising to attract or to buy traffic and to simulate transactions and all of that. So our thesis was based on the premise that we were still going to be able to fundraise a few other rounds at least. There was no way that a marketplace that's the size we were trying to create that would become profitable just because now markets changed. And we tried to do that. We had good numbers. We got where we intended to get by the end of 23, but there wasn't capital available for a startup like ours to continue the journey. So it's not just like becoming more efficient, but a few theses, I think, can easily become incompatible with the current conjuncture of the macro economy.
Yes, 100%. And this is something you don't control. And Fernando, there is one part that I think that this is what makes differentiate founders. That is like the ability to pivot and pivot fast and face difficult conversations at a timing moment, right? And I guess that you had to go through this, right? Like throughout your journey with all the changes that macroeconomic changes that we had. Can you tell us a little bit more like how was like this new fundraising journey on this new market context?
Yeah, I think 24 was no doubt the hardest year that I had in my professional career so far, but it was rewarding at the end of it. But what happened was, like I was saying, we got to the end of 23 with the numbers that we planned to get. And even though we weren't able to get our next funding round, we had half of that round committed by follower funds, but we didn't have a lead fund. As we all know, like a retail or e-commerce goes really well in November and December, and then it dips in Q1. We knew that if we didn't raise money in Q4, we weren't going to be able to raise anything on Q1 24. So I knew that we had to make some hard decisions. So the first hard decision that we had to make there was either are we going to shut the business down or are we going to try to do something different here? And I loved the team that we had and the investors that were backing us. And I still strongly believed in the thesis. So I decided to go for one more shot there and trying to put into practice everything that I learned about what investors wanted and didn't want, what the market wanted and didn't want. And that was the beginning of the pivot journey. But I think before I start to tell how I did that, one question, and up until now, is always in my mind, like, is this resilience or just stupid insistence about...
Yeah, are you stubborn or are you driven, right?
And I think the answer to that will only come after the final outcome. If Doji does really well, they're going to say that I was resilient.
Yeah.
And if it doesn't go well, they're going to say that I was stubborn. So what I know is that in all journeys of successful startups, you can find a lot of moments where resilience was super important. There isn't a single success story that you hear from entrepreneurs that didn't go through that. So I think resilience is a necessary element for a founder, but not a sufficient one. It's not enough for you to be resilient. Things are not going to happen by itself, but it's a necessary one. And I had those moments in my other startups. And here at Doji, when I saw what we were facing, I know that this is a potentially pivotal moment where many founders would have given up, especially the ones that are not true entrepreneurs. It's not in their blood.
Yeah. And also I think that like in your case, you still believe in your thesis. Your thesis still makes sense because sometimes some of those macroeconomics makes your thesis not make sense anymore. So it might be like a moment for you to just quit, right? But in your case, like you still believe in it. You see like saw opportunities in the market. It still makes sense. Although what changed was like the VC market, not your market, right?
Exactly. And I think there were other things, like there were now competitors in the UK that were making your life harder, that they weren't there when we first fundraised. So there were other things, not just the macro economy, but there were more people starting to look at that. That made investors a little bit more concerned about the thesis itself. There's a famous story here in the VC landscape that founders, this super seasoned founders, friends of mine, they raised a lot of capital to build a nice thesis, and the markets shifted. They still had like 70 or 80% of what they raised, and they decided that the thesis no longer made sense for this new economic and they returned the money to the investors here. And that was like a really remarkable story. So it needs to be like that. Yeah. You can only move forward if you're still like in love or believing what you're building. And that was the case.
Yeah, because then you're going to have more ideas. You still believe in it. If you're still passionate about it, this is going to drive you to understand, to still look at it at night and think on the showers on ways to make it work, right? And yeah, hearing you talk about like how Doji started and how it evolved, one of the things that calls my attention is C2C. In the VC moment, in the fundraising moments that we are, I don't know, you can talk about it better than myself, but was it one of the reasons why you changed from C2C to a different business model, the fundraising?
Yes, I think to achieve the greatness of what we envisioned for Doji, it needs to be VC backed. It needs to continue being VC backed. And for us to have the support of VCs, we needed to find an angle that made sense with what they're looking for, and still solving the same problem, but finding a different angle that is more compatible to the current temperature of the market. So when we were trying to fundraise, we heard like from Brazilian funds, we heard that they wouldn't lead a type of round like that in a UK startup. We were based in the UK, so Brazilian funds didn't want to lead a round for UK startups over there. We heard that a lot.
And what did you hear about British funds?
The British funds or the European funds, they were, number one, concerned about a competitor of ours, back market there. They have raised more than $1 billion backed by Goldman Sachs, and they were doing quite well. They weren't solving quite the same problem that we were. Phones were still in the drawers, but they were creating this ecosystem for people to be able to buy secondhand phones. So we wanted to get people to sell these phones from their drawers, etc., and cut intermediaries. But at the end of the day, we would still compete with them for keywords or whatever. So back market was one of the repeated reasons that we heard. And the second thing is, like I was telling you before, Doji would still have to raise multiple future rounds, like a series B, C, D, and no one knew how the market there still is a lot of uncertainties about interest rates and inflation and all of that. That places a lot of influence in what happens to VC, right? So betting in a startup that would still need to raise a lot more future funding rounds means that you need to trust that the environment is going to be healthy enough for the startups to be able to continue. Otherwise, you're going to do this round right now and the startup is going to die in 2 years because of lack of funding. So they didn't want to invest in a startup that would still be very funding dependent for the next few cycles. So what we did at first was, well, we learned a lot, and there was a huge void here in Brazil market, because the only player that was doing that in a structured manner here in Brazil, Trocafone, they were going through a hard time and losing many of the contracts that they had here and leaving a gap for the Brazilian market to be explored. I already had the relationship with Brazilian funds, and my initial idea was, well, if I bring Doji to Brazil, I won't have the rejection for not being in Brazil anymore. And that's the first thing that I thought about doing. But when I started to talk, my idea was I don't want to spend customer acquisition costs on both ends, sell side and buy side. So I need to find one of these sides and get them for granted. And I went to professional phone resellers, people who buy lots of phones, refurbish and resell, and invited them to be part of Doji. And I heard from all of them that didn't make sense. Well, they didn't need another channel for them to sell their products, because everything that they could buy, they could sell in the same day or in the next day. Yeah. So, and they were saying, well, if we were able to help them buying these phones, because they were massively bottlenecked about inventory, and then we would have something. So that was the first spark that there was a big necessity here to be solved, and that was very compatible to what we had learned and what we were building so far. So I started to look into different theses that solved the same problem around the board. I was in love with a Chinese company called Aihuishow. These guys raised more than $1 billion, IPO'd at New York Stock Exchange. They're processing over 100,000 phones a day. Wow. But, yeah, in China. But China is a different animal. Still, I really studied their business model and was the initial inspiration to build what we're creating here at Doji, which is like finding a convenient way for anyone who has a phone in their drawers to put these phones back into circulation. So that's where the idea came from. I didn't want to tell the team yet that I was considering pivoting. So I went back to my coding days. I spent like November and December and part of January, like every night, every weekend, I was coding the new version of what I thought Doji should be. And when I decided to pivot from the marketplace to trade in, from UK to Brazil, from C2C to B2B type of model, I had to align first with investors. And then when I told the employees what we were doing, it was a very sad day because we had to let go like 2/3 or even 3/4 of the team. We were short on runway, but all that had to be done. And it was the initial seed of what led Doji to grow and evolve to what it is today, which enabled the new fundraising.
Yes, that story is amazing. But the fact of you heard the feedback from the VCs, you read the environment, right? And you took action. Because in the end, sometimes you're so in love, so passionate about the business that you built, that it's hard to take action to change it, right? To do the changes that you know that need to be done for you to survive, or even to communicate that to a team that is also like really proud of the work that you've done so far. Like, do you have any tips on how to do it with the team and also with investors? Like, how do you come to an investor that invested in an idea and say to them, like, look, we're changing to this? For the ones that give you the feedback, it makes sense. But there are other investors that like the B2C, the C2C structure, right? Like, do you have any tips of like to founders like that need to pivot? And I guess like that I would guess that most of them need to pivot at some point, if not now, at some point. Like, what are your learnings on how to do it well?
I think the first and probably obvious thing is that do it sooner rather than later. Because if you have a short runway and you wait until it's too late for you to do what you need to do to lay off people, even with a very low cost structure, you won't have enough time to test and to reiterate. So when you decide that it's time to pivot, you need to be ruthless. You need to be able to take or make all of the hard decisions, and with this kind of mindset of no half measures. This needs to be done, so let's do it that today, not tomorrow, and as soon as possible once the decision. The second thing that I learned that worked really well, and that I also learned by being an investor of other startups, and investors typically are investing on two things: the founder and the market. Not particularly your idea, your initial thesis, because they know that that is going to change and morph so much. Yeah. Yes. So I was still the same founder, still in the same market. And I had been brutally transparent with them throughout the whole process. They knew our numbers. They knew what was going well, what was not. And when I decided to pivot, I didn't have one single investor saying, well, this doesn't make sense. I don't want you to do that. They knew that. I put a lot of work studying this new market, and if I was decided to commit my time for another, I don't know how many years, they would back us up. So, and same thing with the team. The ones that were leaving, there were great people that left the company, high performers, but they weren't suitable, or we didn't have enough space for the new positions that would be required. So the same day, I had to have really hard conversations with everyone. I was the one that had to lay off every individual. I explained to them that it wasn't because of their performance. It wasn't their fault. It was just the market circumstances. We decided to pivot, and in this new design of company, we wouldn't have space to or budget to accommodate everyone. And I did my best to help these people to be relocated in the market. I shared resumes with other entrepreneur friends and helped them, mentor them to how to adjust their CV. So I did also a lot to help these people that were laid off. But for the ones that stayed in the company, I had, at the same day, I gathered everyone and said, okay, there's no more layoffs. That's it. If you're here, you're safe, you're wanted, and I need you to be on my side throughout this hard journey. I explained to them, again, brutal transparency, telling them how much runway we had after that restructuring, where we needed to get, what was the plan to get there. And we still didn't have commercial contracts, or product wasn't released yet. We just had a new idea and a team of super intelligent and driven people to make that happen. But keeping the team motivated, and we were lucky that not a single person left the company during this whole process. And that I think was one of the greatest things. So brutal transparency with investors, brutal transparency with the team, both the ones that are leaving and are staying. These were key elements for the pivot.
And avoiding hard conversations, right? Because what I see is that like most people first like avoid discussions, avoid conflict, avoid hard conversations, avoid layoffs, right? We see that happen all the time. It's just because companies change priorities. You got to do what you got to do in the end. And this is business. I think that it's what you have to do, but there are ways to do it that is like more conscious of the people that dedicated for your business, right? That is conscious for their time, like the conscious for the investors that believe in you. You cannot like delay the hard conversation, which I think is what the most people do, right? That delay the conflict, delay the hard conversation, delay the decision.
Yeah, I don't know if I couldn't have done that sooner. Probably I could, but I still, it is a thin balance because I still believed in the other business. I was starting to get the signals that we weren't be able to fundraise, but I had this timeline, this deadline that was end of 23, and I stuck to that timeline. So when we didn't fundraise, I took all of these actions, but maybe I could have done that sooner. We already had enough signals that wasn't going to happen. I don't know, but you have a great point. And it's always, I think the pain of pulling the Band-Aid is usually much greater than pulling the Band-Aid. Like the expectation, oh, it's going to hurt. So you start to
inside
delay
your
a lot.
head before you do it is always worse than actually doing it.
And that is worth for anything, even personal life, like professional life. I see like hard decisions, people and myself included, we tend to postpone that a lot until it's unavoidable, you know?
Yeah. I think that like there's a level of postponing that is acceptable, but it's just you being mindful of doing it in the best way possible, right? But then you are taking action, you're not postponing. At the moment that you're just like not saying what you gotta say or like doing what you gotta do because you're afraid, this is when the problem starts, right? And I've seen so many founders in this situation. Like, I love this pivot part, but I love also to hear more about your investor journey. You started as an angel investor, then you started like investing funds, Niu Ventures included. What strikes you in a founder? Like, early stage investing is all about like investing in the founder. Like, we spoke about resilience. Like, what else do you look in a founder to invest here in Brazil?
I think before answering this question, one thing that I learned is that being an investor and talking to a lot of founders all the time, there's this kind of part of my job description of being a founder of a startup. I'm always talking to very smart people, much smarter than I am, that are using new technologies, that are talking to different VCs that I didn't knew about, and they tell me which VCs are deploying, which VCs are not, what tech they're using, what markets they're looking. So all of that are great information for me to keep myself up to date and know what's happening there. So talking to other founders or being an investor, I think is one of the greatest, I think not so spoken of, but elements of being a founder myself. So that helps me a lot.
Multiplying, you're learning,
so,
like helping others. Yeah.
Yes, exactly. So, and when you start to meet founders, invest on them, hear their stories, and even if you don't want to invest, but you help them, eventually, if you have like this mentality of paid forward, this person is going to introduce you to someone that is going to introduce that concept of serendipity. It happens a lot when you're connected to this. So I think a lot of the success that I was able to have in my fundraising journey is because, one, the network that was created starting from these connections, and two, the goodwill and the reputation that you build by helping people like truly and without expecting anything in return. Like funds, they always do that. They're going to reference check you against a lot of different sources. First thing they're going to do is who from their portfolio know that founder. They're going to talk. So that helps me a lot as a founder to be connected to in the industry. That's one thing. But
I love what you just said. It's just like, I imagine being your day by day, like how many times do you see a pitch and you learn something from your company yourself? Take the inputs from the conversation, right? Like
exactly.
With other founders. I love that we have people like you giving back and developing Brazilian ecosystem. Remember 2014, how much we didn't have really a startup ecosystem in Brazil. There are just like a few founders here. challenging the status quo in Brazil, trying to do copycats. And at this point, we develop our own startups. We have over 600 institutions investing in Brazil. We have an ecosystem developed of startups, lots of fintechs, but a lot of other businesses as well, like retailer and other sectors, right?
I was there at that time. My first startup was created in 2011. A lot of things that I learned was like by making mistakes. It was only in 2016 where something called Endeavor called us and said, oh, we have this program here. Do you want to be part? And I was in the first batch of Endeavor Scale Up. At the time, it was called Promessas Endeavor. They were backed by JP Morgan. So I met a lot of phenomenal entrepreneurs in that cohort. A lot of them were really big shots today. Like they did really well. And we had like this intense 1 year, I don't know anymore how long it was, but with weekly or bi-weekly encounters where we were discussing culture and fundraising. We were discussing. So that was very new to me. I was an entrepreneur for 5 years at that moment without having a clue of any of that.
Like the true lonely journey, right?
Yes, exactly. And then I had to start to get in contact with mentors, which I keep in touch up until today. People that taught me a lot, and I try to retribute that a little bit. Doji was also part of Endeavor Scale Up. So all this mindset of like having someone more experienced than you, teaching you a few things, and then you passing that along for founders that are starting just now. That's pretty much, I think, the mindset that can transform the ecosystem here.
And Fernando, we have an audience of international investors. When we compare our startup ecosystem here in Brazil with the ecosystems in the other parts of the world, like, do you have any observation to share with those international investors?
I think one thing that I observe a lot is that if you look at same verticals or same problems that are being solved by Brazilian startups or Latin American startups, and for instance, startups from the US, first thing that you're going to notice is the amount or the difference in the amount of capital that was raised. So startups from the US is very common for you to see like hundreds of millions of dollars raised, right, in a few funding rounds to solve that problem. And in Brazil, like startups solving the same type of problem, raising like 5 to 10 millions and already being a noticeable size. And the big difference that I see is that in the US, usually it's not just one startup heavily fundraised to solve that. There are going to be 4 or 5 of them. Fierce competition around talent, around the customer. For a lot of these markets, especially the ones that are as the winner takes it all, there's a lot of chances of one of these startups end up failing or being merged with the winner. And here in Brazil, there is, yes, a lot less funding than there is in the US, but usually the funding itself is a huge competitive advantage. Startup that has funding here are going to compete with probably a lot of other business that are family ran or probably doesn't even exist. It's almost like the startup is competing with itself to solve the problems and to thrive. And of course, there's a lot of bureaucracy. So having a local team that knows how to navigate like the tax system and the legal part, all of that is very important here in Brazil. We say Brazil is not for amateurs, and there's a reason behind that. But the thing is, less fundraising, but much lower valuations and less competition as well. If you look at main VC metrics like their yearly returns or multiple on invested capital, it's very common for Brazilian funds to be placed among the top quartile, if not top decile. Smaller funds, yes, of course, but when they know how to spot the opportunities here, market is huge, competition is lower. So there's I think great opportunities to be explored here.
And when we talk about like international founders that wanted to expand their business to Brazil, lots of startup entrepreneurs from tiny countries. I help people from Czech Republic, from Canada. They wanted to expand to Brazil. There are a few things that you should be mindful of, like such as infrastructure or tax structure. I always recommend them to look at the unit economics or payment methods. We have instant payment here in Brazil, what we call PIX. But is there like anything else that you would look at, like not about like this infrastructure stuff, but like what like does take for a founder to thrive in Brazil?
I think there are great cases of founders from abroad that were able to be successful here. I think the most notable one is Nubank. Right. We also have Florian and Matt from Loft, and before that from Printy. And we have a few cases that international founders were able to do well here. It's, of course, always important for you to have partners, either founding team or senior people in your team that really knows the complexities around here to be able to navigate through them. About infrastructure, I think when you're building, like we were, a business in the UK, all the infrastructure was there for us to use. And that was really, we could focus on the core of the business. When you move your business to Brazil, there's a lot of small things that either you're going to have to do it yourself, or you're going to partner up with someone that doesn't have an exact solution for what you need. And that partner is not going to scale at the same speed that they're going to need. A classic example for that is Mercado Libre. So Mercado Libre, they had to create their own ecosystem to allow the marketplace to become as big as it did. So they have their logistics solution, they have their payment solution, they have their advertising solution. So for everything that is essential for a marketplace, they had to build their own because they couldn't rely on the traditional providers here. And that's typically the case when you scale a business in emerging economies. The same thing.
Southeast Asia as well, yeah.
Yes, Flipkart in India.
Yeah.
They had to do the same thing that Mercado Libre did here. So when you're going to an emerging market, not all the infrastructure is there. Yeah. But on the flip side here, if you look at the financial infrastructure here in Brazil, I think it's very advanced.
Yes.
Like the open banking, Pix, and all of that. So I think Brazil is a role model for many of these things, even to more advanced countries, technically advanced countries, because of everything that has been built here. So I wouldn't worry so much about the payments infrastructure, but logistics, tax, bureaucracy, legal, all of that is still a big points of concern.
Yeah. One point on the other hand, like on the other side, like one point that I think that is really attractive about Brazil is like how big our population is. Like most people take us for granted, but we are like a 200 million people country. And most of these people are not like tech sophisticated, but they are tech savvy. They have a smartphone. They are on WhatsApp, right? They do instant payment. So they have a routine on social media. So I guess like this is something that also is really attractive for a company that is looking for gain traction in B2C, right?
Yeah, I think that is a great point. People in Brazil, they're early adopters too. They love
something new stuff. Yeah,
an easy way of doing things. So it's really easy for some kind of useful tech to go viral, and everyone then is using it. You see Pix, like in just a couple of years, everyone, like almost 100% of the banked population is using that. While when I was in the UK, I think people love their traditional solutions for a lot of things. Yeah. So you have to spend much more energy trying to convince people to adopt what you're proposing, even though there are clear advantages. I think that is a great part. The second thing is, like, if you copy and paste your international product, it's hardly going to work in Brazil because of the cultural differences. And I have a few examples of that. One of them is, again, Mercado Libre and Amazon. Mm-hmm. So Mercado Libre created all this great UX based on the population, like, don't make me think, big buttons, color, and you click at the same place of the screen 3-4 times, and then your checkout is done. So it's really easy. Experience it's very smooth. Amazon, the size they are in the world, and they're trying to bring the same solution they had in other countries here to Brazil. Small letters, it's kind of polluted. If you look at bounce rates for Amazon, it's like twice as much as Mercado Libre. So the UX that works really well outside of Brazil, it's not plug and play here. Another great example, Stripe, for instance. Yeah. We were users of Stripe in the UK. I think the best dev-first type of solution that I have ever seen for payments. It was amazing to work with Stripe in the UK. When we tried to use Stripe here in Brazil, they didn't have Pix or installments, which are things that are very natural for Brazil. Yeah. So it's very hard for an e-commerce business to survive without Pix or installments. Yeah. So I'm sure, and I had great conversations with them recently, and they're evolving in all of that. But my point still remains, like, copy and paste doesn't usually work for
true. That's so true. And I think this is part of like what we're saying, like that Brazilians are not sophisticated, but like they are tech included, because in the end they want something intuitive, that I'm gonna try it once. I don't have much patience, but I'm gonna try it. They are easily to convince to try, but when they're trying, you have to convince them, and then your UX needs to be ready. Good point. It's the first time that we bring a Brazilian to Niucast, us both being Brazilian, talking to English to our audience. But thank you for coming, Fernando. Thank you for accepting our invitation. It was such an interesting conversation. If you wanted to contact Fernando Montera, he's also an angel investor here in Brazil. My name is Amanda Martins. I'm a venture partner at Niu Ventures, and this is Niucast. Thank you.